I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, the website oilandgas-investments.com. Welcome to the show, Keith.
Jim, always a pleasure.
The big meeting held the other day with all the oil producers about freezing production levels, nothing worked out, did it?
No, but the big news, Jim, is that it didn't make a difference to the bullish sentiment in the market. I think that nobody really anticipated much happening realistically in Doha, in Qatar. I certainly wasn't. I did think that they would try and talk oil up a little bit more. When they in the communique that came out, but obviously they came out just so divided. OPEC is just so dead. Saudi Arabia doesn't give a tootie about any of their other oil-producing nations. Just could not care less. In fact, probably hate them way more than they hate the Americans and the Canadians for increasing oil production. But yeah, the oil price kept going. So as soon as the news came out Sunday afternoon, our time, oil was down like over 5%, or something like $2.50, $3, and then it just clawed its way back, and then it kind of just closed down a little bit on Monday. Then it's up today, and it's up big. It's like up $1.50. So it's been pretty impressive.
Well, obviously, with oil now over the $42 mark, it's helped the Canadian dollar, which is topped 79 cents at the time that we're talking. The highest
hit
point.
not all time. A year high today. Yes.
Yes. Obviously, the two are so closely matched together. And it even has the parliamentary budget officer a little more optimistic about government revenues. He says the federal government's deficit will only be about $20 billion this year instead of their projected $30 billion.
Yeah, if oil keeps going, that deficit number should come down even more, you betcha.
I know a lot of people thought Trudeau would be a totally green prime minister and would, stomp all over oil. But he hasn't said much about that. In fact, he seems to be in favor of pipelines.
Yeah, he seems to, the Liberals are really, the federal Liberals are turning into pragmatists in a hell of a hurry, which is only makes common sense. During the election campaign, you say whatever you have to get elected, and then you just say, oh, we didn't know it was this bad when you get into power, and you keep rolling. So, yeah, it's good news, I guess. Well, who knows what the Liberals think? Generally, they would sell their mother for $5, but the reality is that once you get into power, you have to be pragmatic, and I think that's what these guys are doing.
You said it could be a perfect storm for natural gas. Real storms or pretend ones?
Well, I use that phrase because what we're seeing here is that so there's a big dichotomy happening in natural gas, Jim, and that is where the stock prices are actually looking awesome. The stock charts look fantastic on all these leading natural gas producers, but the fundamentals right now in natural gas are horrible. So you're looking at companies that like Cabot in the States or EQT that are really starting to break out, Console, and so, but really production is I guess the bullish thing about production, Jim, is that it's not going up 4 or 5 BCF a day like it has each of the last 2 years. And so production is staying relatively flat now. And I guess the markets might be pricing in production rolling over. But what's interesting is that this year we seem to be getting warming waters on both the Atlantic and the Pacific on either side of the United States. So last year, we had El Nino, which is a cooling of the eastern Pacific waters off Mexico. And so that, for some strange reason, causes the east coast of the U.S., which is where most of the people are and most of the natural gas demand is. That causes quite a mild winter over there. And so there wasn't much demand here, much like the winter of 2012. And so bloated inventories were the result, big gas inventories. But now what's happening is the opposite, where we think El Niño is going to happen this winter, which is quite a warm Pacific waters. And for some strange reason, Jim, that means very cold weather on the U.S. East Coast. So people are starting to think, wow, we are not going to have another really mild winter this coming winter. The street is pricing in quite a cold winter already, because natural gas prices for next winter are, well, in the States, almost 50% higher, and in Canada, close to double what they are now. So that's intriguing. And then what's also happening is that on the east coast of the country, in the Atlantic, there has been a big blob of super cold water off just north of the Canadian East Coast, and that has kept the Gulf Stream down much farther down south. And so all that warm water from the Gulf Stream that's been backing up there is now getting superheated with spring and summer arriving. So, in 2012 we had Hurricane Sandy, we had lots of storms and really hot weather that really caused the corn crops to wither, and corn prices soared. And so what the meteorologists or the people who follow weather are suggesting right now is that, holy moly, we could see a really hot summer followed by a really cold winter. And so the street has kind of jumped on this a little bit and is starting to move up the natural gas price on anticipation that this might happen, which is kind of crazy, Jim, because who really knows about the weather? But anyway.
Well, they were right about El Niño this year.
Yep, they absolutely were.
And that's caused by underwater volcanoes venting. You don't see anything, but you feel it.
There you go. Okay. I can't say I really know that, but I'll take your word for it.
Well, I don't know. That's what people have been telling me who know about stuff like that, because I always ask, why is it doing that? And nothing to do with human activity. It's all volcanoes. And as someone said, you can really control the weather, can you, if you lower human activity? Because one volcano going off negates 10 years of greenhouse gas
yes,
carbon.
That's what I've heard as well.
Carbon credits. So you really can't tell the volcanoes to shut off just because you're paying 4 cents a liter more for gas.
Mm-hmm.
That's the flaw with trying to control climate with gasoline prices.
Yep.
What are gasoline prices looking like for the summer right now?
Well, right now I would have to say that they're going to stay pretty flat here. What we're seeing is pretty big increased demand in the States, but the refineries are meeting that. So I'm still thinking that we're not going to see any big drop in gas, but we're probably not going to see any big rise in gas either. So,
right, and we did see quite a bit of a rise. We did have a break. And, of course, Vancouver isn't a good place, I guess, to judge the rest of the prices in Canada because we have that 17 cent a liter transit tax.
No, that doesn't make a difference. As long as it's constant, Jim. Obviously, we're seeing, oil's gone up 50% in the last 3 months. The last 2 months, really, from the bottom in mid-February at 26, 27 intraday to 40, 41 here. So, but gasoline prices are not up 50%. And part of that reason is, the Canadian dollar strengthened so much. We were at 64 cents at the low, and now we're 80 cents today. So that really makes a big difference for us. And so that's kind of cushioning any rise in gasoline prices. So in the States, I would expect to see slightly higher gasoline prices as the summer drags on, but not a lot higher. The U.S. is much more demand elastic than us. Their usage changes up and down quite a bit depending on what prices are, whereas ours is not like that. We're pretty steady.
Also, something maybe gasoline producers should be looking at is China, where apparently drivers there are now in love with SUVs.
Oh yeah, so there's lots of there's lots of wealth over there, and I don't know how long that trend is going to go. The yuan's starting to depreciate. Gas is going to get a little more expensive over there, but the reality is that there's no doubt that Chinese demand is still going up. Might not be going up quite as fast as everyone thinks, but it's still going up, and it's going up on a much larger base than before. So
right, and of course, a 1% increase in China, considering the numbers of people involved, 1% is a huge volume.
Yep, you got it.
We'll have more with Keith Schaefer right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to West Vancouver Friday, May 6th at the K-Meek Center. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Keith Schaefer. Keith, with the Canadian oil rig count now down to a record low, you were saying what, just 38 rigs out there pumping or looking for oil?
Oh, no, oil rigs is only 8.
Only 8.
Yeah, there's about 30 rigs total, 38 rigs total, but most of those are gas rigs, gas-weighted rigs. And so those would be in the main of that would be the Montney Formation on the BC-Alberta border. So that's gas/condensate. But what we're seeing is that for pure oil rigs, there's only 8 operating in Canada, a stunning number.
And at one time, I think it was around 200?
I'm not sure what the high was, but it probably was that, yep.
What is that going to mean for the future of oil production in Canada?
Well, I guess the big thing for Canada is, Jim, that, our oil sands are high CapEx projects, and there was a lot of projects that were approved 2 or 3 years ago that are half-built that are going to get completed now. So our Canadian production is actually going to stay flat or go slightly higher. But certainly the smaller scale oil production is going to go down, and probably even more than we thought with these types of drops. So there's a good chance here that Canada, instead of being an increased producer over the next couple of years still, will be a flat producer. So just like the States, Jim, our industry is very nimble, so it doesn't take much to get rigs back in the field.
What about the brain drain or the drain on talent going elsewhere? Would it come back right away?
Well, that's a great question. And I guess in one sense that's the big question. I'd say that's more relevant on the services side than on the producer side. But, I guess what the bulls are saying is that, hey, the brain drain's been big enough now after 2 years that when this thing turns around, we're going to have a hard time hiring people to man the rigs. And a lot of these rigs, people got to understand, Jim, that of course you do have what we call the roughnecks, guys who perhaps don't have the highest education but are willing to work hard and make lots of money. But there's a lot of talent on these rigs that are actually quite educated and sophisticated, and those guys are going to go use their talents in a different industry if to feed their family. So do we think that given how mercurial the Saudis now are with managing the oil price, that they'd be risking coming back to a much more uncertain industry than what it was before? I don't know. So certainly the bulls oil bulls are pretty confident that we're just not going to get the action out of that brain drain than what a lot of people think.
Well, I was thinking the IT guys that are just as necessary to an oil rig as they are to your office, they will have found jobs.
Yep.
And why risk losing jobs again in the oil patch, even if they pay more?
Yep, exactly.
Is that a psychology that people have to deal with now?
Yep. The bulls are absolutely very aware of that, and so they love to crow about that, and it could be right. I don't know.
Is there any other influence on the energy market if things like gold and silver pick up?
No. That gold and silver, in my humble opinion, Jim, and I know you interview lots of newsletter writers on that stuff. Gold is, in my mind, strictly a derivative of the U.S. dollar, has no beneficial use whatsoever other than as a trade against the greenback. So all gold and oil, all gold going up means is that the U.S. dollar is coming down, which is also good for oil, obviously. But there's just no correlation really between oil and gold, other than that they both seem to trade off the U.S. dollar.
Now, I know, of course, there's a push to get an oil pipeline across Canada to eastern Canada. The Quebec mayor's against it. And it didn't help that the XL pipeline had a spill in South Dakota. I thought it was supposed to be a brand new pipeline that wasn't supposed to have fractures.
You know what, Jim? I was unaware of that. The XL pipeline.
Yes.
Well, you know, obviously people really need to take pipeline spills seriously. I think that the industry, you know, they say they take it seriously, but then when you hear the head of TransCanada Pipelines here in BC saying, no, we're not going to make public our spill response system. It's like, are you kidding me? Like, what do those guys think when they say stuff like that? So,
well, it was their pipeline that fractured in the XL.
So I'm just still stunned. I really don't believe the industry has what we call a quality spill response system in place, despite the way they're operating. So it makes me sad to hear that there is a new pipeline that's had a spill, but I think that they're probably out cleaning it up as best they can.
Well, the pipeline was closed for a while. It's open again, but the public relations disaster, you know, happens over and over again, and that's why people against the pipelines here say, see, we told you. Even if it's brand new, they can't keep it from bursting. It's a hard sell.
Yep, I think people get a little too worked up about some of these things, but I hear that even a drop of oil is bad, but the reality is the industry has accidents in every place, and obviously you don't want to have a Macondo happen on any kind of regular basis, but oil spills will happen, just like you don't shut down the electrical grid because someone's worried about getting electrocuted.
And of course, they're worried that if they have a pipeline, a widened or doubled one to Burnaby in BC, the number of tankers in Vancouver will go from 100 a year to 400 a year. And they're worried about tanker safety as well, considering right now all we have is a couple of Zodiacs with mats to soak up any spill.
Yes, Mr. Trudeau and his newfound commitment to pipelines would have to absolutely fulfill his election promise and reinstate the increased fire boats that they had under the Broad Street Bridge in Vancouver.
Keith, anything else in the energy business that really is catching your eye right now?
Well, I just think, Jim, we still need to be a little bit cautious on the oil price. Everyone seems to now consensus has moved pretty dramatically in the last 4 weeks, where we were going to be oversupplied forever. Now, all the major forecasting groups are suggesting that we're going to go from 1.5 million barrel a day surplus that they say we have now to only 500,000 barrel a day surplus within the next 6 to 9 months. And, 500,000 barrels a day surplus on 93 million barrels demand is truly a drop in the bucket. And so I would think that the tide now is for higher oil prices. There's going to be waves of cheaper and higher, but I'd say the tide is now for higher oil prices. And it'll be interesting to see over the coming 6 months how much the producers get to keep of that and how much the decimated service sector will be able to negotiate back.
Well, I know I took a note. Somebody was predicting $60 a barrel oil in July or by June. That was Raymond James predicted $60 oil by June, and that was back in January.
That's the U.S. arm of Raymond James. The Canadian arm of Raymond James are distancing themselves from that claim. The reality is that Raymond James was the only group that called the oil price to drop before November 2014. But the sad thing was they started saying that in 2012 pretty loudly, and so they were dead wrong for 2 years, and finally they're going to be right. So it's just a question here of how that might play out here. Is they made the mistake, Jim, of putting both a price and a timing in the same sentence. And anybody who forecasts knows you should never do that.
Keith, thank you very much for chatting with us.
God bless you, Jim.
My guest has been Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, their website, oilandgas-investments.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our YouTube channel, Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.